Hello everybody, welcome back to another valuation investing video, and today I'm going to be analyzing Microsoft stock. I'm going to be analyzing Microsoft stock by using my 7-step stock analysis, and then at the end of this video I'm going to value the stock and see whether or not Microsoft is a buy at these prices. So with my 7-step stock analysis, the first thing I want to look at is the PE ratio. I want the PE ratio of Microsoft to be greater than 0. Meaning the company makes money. Next, I want the forward PE ratio to be less than 30. The reason I want it to be less than 30 is because about greater than 30, it starts to get a little overvalued, and we want analysts to expect the PE ratio to be less than 30. Showing the price of the stock divided by future earnings per share is less than 30. The next thing I like to look at is the revenue growth. We want revenue growth to be greater than 5% and also EPS growth greater than 5%. So we want the sales of the company to be growing by a larger than 5% rate and also the EPS growth to be growing at larger than 5% rate, which is the earnings per share. Then we want the debt to equity to be less than 1. The reason we want it to be less than 1 is because it shows that the debt is less than equity, meaning that Microsoft is unlikely to go bankrupt. Next, we look at the shares outstanding. We want the shares outstanding to be decreasing. The reason we want them to be decreasing is because if shares are going down, us investors will own more of the company. Finally, we like to look at expected earnings per share growth, which we want to be greater than 5%. We want analysts to expect Microsoft to be growing at a greater than 5% rate in the future. If we go ahead and look at Microsoft, we can see their trailing PE ratio is about 37. Which is greater than 0, meaning Microsoft does make money and is profitable. However, if we look below that, we can see the forward PE ratio is 32.79, which is greater than our 30 that we want. So first off, we have a check for the PE ratio of greater than 0. However, we do have an X for the forward PE ratio, which is greater than 30. Now we are going to look at Microsoft's revenue growth. As we can see in this chart, it has grown pretty consistently over the past 10 years. As of late, it has been growing at an about 15% rate, which is very good growth and is greater than our 5% expected, which is a check mark. Then if we look at Microsoft's earnings per share growth rate, we also want this to be greater than 5%. And as we can see, it has been about 20 to 30%, which is insane growth with such a big company, which is why I love the stock. So that is also a check mark on earnings per share. Now if we look at the shares outstanding of Microsoft, we can see it has been decreasing pretty consistently at about a 1% rate, which shows us that as investors, if we own the company before, we will actually own more of the company even if we don't buy any more shares. So this is very good sign, and this is also a check mark for Microsoft. Then if we look at the total debt to equity ratio, we can see it is at a 0.36, which means that Microsoft's debt is much less than their equity, showing that it is very unlikely for Microsoft to go bankrupt, which is very good for the company and also is another check mark. So far we only have 1 X and 5 checks. The final metric we look at is the EPS growth over the next 5 years expected by analysts. And as we can see, over the next 5 years, analysts expect Microsoft to grow at an about 14.6% rate, which is very good and above what we expect. So that is also a check mark. So as we can see with our 7-step stock analysis, Microsoft has 6 checks and 1 X. Before I get into analyzing Microsoft stock and seeing if it is a buy today, please hit the subscribe button and the like button. This will help the channel out. Now let's get back into analyzing Microsoft stock. So as we can see with Microsoft, I'm going to put about a 14% revenue per share growth. The reason I'm going to put 14% is because analysts expect about a 14.6%. We want it to be slightly less than analysts so we can have a slight margin of safety. So we're going to leave it at 14%. Then if we go to net profit margin, we can see that over the past 1 to 5 years, it has been around 36%. So let's leave that, let's put that about 36%. Cash conversion rate, we can leave at a 100%. Then if we look at the terminal PE ratio, even though it has been about in the, even though the PE ratio has been in the 30s lately, I believe Microsoft should be at about 25. I believe Microsoft deserves a premium compared to the market. Since the market averages about 15 to 20, I think Microsoft is a much better company and deserves the premium. So I'm going to put at about 25. Finally, I'm going to put a discount rate of 15% in order for us to have a margin of safety and make sure that we are buying at the right opportunity. As we can see, our fair value price is about $383. As of right now, Microsoft is at $433 per share, so right now it seems a bit overvalued if we want to get a 15% return. But if this stock does go below 380, I'll probably look to purchase more. Microsoft is one of my largest holdings and I look to further this position. Thank you guys for watching this video. I hope you learned something new today and see ya.